vice president said he wanted somebody who was ready to lead on day one. And in Kamala Harris, that's who he has. She's got great leadership qualities. Obviously, she ran the biggest attorney general's office in the country in California. She has great personal qualities, compassion, great judgment. I think she's really good at taking a lot of information, synthesizing it, and coming up with a perspective. She's direct, transparent, and I think she is the person in the moment that we need. She's obviously very focused on working Americans. She's very focused on helping those most in need, particularly those hurt by the virus. You know, almost half of America has a family member who's been impacted by this. She's very focused on what the 21st century should look like when it comes to something like clean energy. So I think she'll make the case very, very effectively, frankly.
What does an economy look like under Biden and Harris? Because that's one question where Biden has, so far at least, seemed to fall short of Trump. I think voters are more confident about him on almost every other issue, but the economy seems to be somewhere that draws a bit of doubt. What would an economy with those two in charge look like?
I'd expect an economy under a Biden-Harris administration to look like an economy that has shared prosperity. You would have investment in 21st century infrastructure, broadband, upgrading of transportation infrastructure, schools. You'd have investment in clean energy. As part of that, Biden would think about how to create 1 million jobs in the auto industry. In fact, his plan generally is about $5 trillion of spending, which over a 10-year period is earmarked to create 18 million jobs or so. And Ed, I think it's important to also recognize that Democrats do well for the economy. And if you look at the past two Democratic administrations compared to the past two Republican administrations, it's been a better stock market, more jobs, better GDP. Just as a stock market indicator, during the years of Obama, his first term, the market was up 50%. And during the years of the current president, before COVID, the market was up 44%. So I do think it's an outdated myth that Democrats don't do well for the economy.
Getting back to that kind of, that normality or that economic recovery that you talk about is obviously really important. At the moment, I suppose necessarily the focus has been on the healthcare crisis, the immediate crisis. Do you think as a society and to some extent the sort of narrative coming out of DC is missing the broader damage to the economy that's perhaps going on underneath?
That's a big concern I have. I don't think it's just in Washington, frankly. I think across the country, we appropriately are so focused on the health crisis that the underlying damage to the economy is getting less notice than it should. I mean, just think about what's gone on. You have state and local governments, $500 billion deficit just during COVID. You have unemployment we talked about at record highs. You have almost 50% of businesses, small businesses that have been closed since March won't reopen. In New York City, we have 40,000 nonprofits. 80% of those nonprofits, Ed, are going to have at least 20% declines in revenue or more. So it is dramatic. And my bet is that as we get through the health crisis and we see the economic carnage we've had, that it will come into focus. And frankly, it's going to need all of us to come together, including Washington, to make the investment to let us get through this period.
So what does that tell us about the stock market? I mean, is it just completely wrong at this point, or is it baking in something that is a best case scenario?
Ed, I've learned a long time ago not to doubt the stock market. What I would say is that the stock market says, one, we have government policy that has underwritten a lot of risk. Two, not a lot of alternatives for investment. And three, importantly, suppose the stock market is just saying we'll be more patient. Suppose the stock market's saying the country always gets to the right place, and if it's not in 2021, but 22 or 23, that we'll get there. And I think that's frankly potentially plausible.
Will you yourself be going to DC to be part of any potential Biden-Harris administration to help in that pushing the country forward?
The answer is no. I'm very happy doing what I do.
So look, Blair, obviously doing what you do now, you do talk to a lot of the biggest leaders in the business world. Aside from the politics and sort of the stuff that is outside of their gift to deliver, what are business leaders thinking about in terms of what they can do to help get their companies back on track as the economies and as the health crisis begin to ease?
I have to tell you, first of all, I think business leaders have been just as a group incredibly impressive leading their companies during this period. They've shown great concern and welfare for not just their employees, but for the communities in which they operate. They've made important financial commitments, for example. But in terms of how they run the companies, what's interesting to me, Ed, is the best CEOs are using the moment to say, the world is obviously being disrupted. What does it take to be a winner in that disruption 2 and 3 and 4 years from now? What does the supply chain look like? What does distribution look like? What does a real estate physical presence look like? And I think that companies are learning how to operate very quickly in a new environment. And I'm frankly fascinated and intrigued with what we'll all see on the other side. And I think we're going to have a group of companies that, for the most part, several years down the road, are going to look, frankly, even stronger than they looked before the crisis.
One thing we know, though, with CEOs or really anyone running any company is that they love certainty. It's the, if you like, the grease that allows big decisions to be made. When you're in a time like this where you have so little certainty, what's the play? Do companies just shelve any big decision, whether that's kind of meaningful M&A or whether it's some big organic development that they might be otherwise going to do?
So first of all, I think companies and executives really since 2008 have really learned to live with uncertainty. And we've had many periods of uncertainty. Remember, we had a U.S. Downgrade by the S&P. We had a Chinese economic crisis back in 2015. We had a European sovereign debt crisis in 2012. Executives have got very talented and good about learning how to make decisions in an uncertain environment. And frankly, what I think a lot of good executives are doing today is saying the short term may be uncertain, but what do I want to do to make my business stronger in the longer term? And frankly, what they've, and you see it in the M&A markets, what they've come to understand is that being on the front foot in this kind of environment and helping lead action is a better way to manage the company than waiting for all the information available. I think what you want to do is scenario play. There's good outcomes, there's less good outcomes on the macros. And you want to say, against that backdrop, if I make move X, Y, or Z, if I make an acquisition, if I make another investment in the company and a manufacturing facility, what will that look like under different scenarios? And they're doing, frankly, quite well.
I promised myself I wasn't going to ask you about M&A, so I'm not, but let's just go hyper-local for the last question. Centerview, I know you don't have any plans to IPO. We've talked about that extensively in the past. The SPAC boom is very hot right now. Would you consider selling to a SPAC if it showed up?
No, and very simple. I think this moment has proven that being private, paying attention to our culture, giving our colleagues a great opportunity to be mentored and continue to learn, probably the right way for us to run the business. So we're very happy doing it.